To me.
Okay.
Hi, everybody. Steve Tarter. Another edition of Tarter Sauce here at the Peoria Journal-Star in Peoria, Illinois. With me today, CPA Joe Runkle. Joseph Runkle, you've been here how long doing the CPA thing in Peoria?
Oh, this will be my 34th year starting out. So
have you got it figured out yet?
Well, the way they make changes and things like that, I like to look at it as job security. But I've held my own for a while, so hopefully I can make the new changes easier for everybody.
Before we get into those changes, because I think that's possibly one of the things that we can, obviously you can't solve everyone's tax problems through one program,
right?
But you're going to find out who to call. But at the same time, this has been a dramatic change. Would you say in your experience?
They say it's been the most dramatic change in 33 years, and like I said, I've been at 34. So they made the biggest change when I first started. So this has been the biggest thing I've seen.
Did you always want to be a CPA?
It's one of those things where back in 1984 we were all looking for things to do. The economy wasn't the best, and everybody said, "Oh, accountants, they have things going for them. They'll have jobs for a while." So that's what I chose, and I knew how to add up things, and that's where I landed and stayed there for all this time.
You enjoyed math in school?
I enjoy math, yes.
Okay,
yep.
Good. Well,
I'll leave the higher level math to my engineering friends, but so.
Well, it's always interesting to me because, I think you chose wisely because we do need accounting help, possibly more than ever as things get more confusing in our sort of everyday life. How do you break it down for somebody who you had a very extensive newsletter I saw in December, kind of alerting people of things that they might want to think about or do before the end of the year.
Right.
Now we're in a new year. Are there things people can do now, or is it a matter of, it depends on their situation kind of thing?
Right. It depends on everybody's individual situation. Some taxpayers are accrual basis taxpayers, which means that they can still make adjustments after the year end to change things. But most individuals are on the cash basis, which means if you didn't pay somebody by the end of the year or put it on a credit card or something like that, it's not deductible. You can or your income, if you put it in the bank before the end of the year, or you didn't put it in the bank, maybe just sent your invoices but didn't get the money, then you don't have to recognize it as income.
Right.
So there's the December 31st is kind of a cutoff date for most people, but there's still things you can do after the end of the year, such as contribute to retirement plans and things like that that'll help you save taxes for the 2018 filing season.
What is the biggest, and you've done this for say 34 years, when you look at people's tax returns, or maybe their efforts to do it before they turn it over to you, are there standard mistakes that people make that you've seen over the years?
Oh, usually it's maybe just not documenting everything as well as they should, because things are deductible and people are afraid to take deductions if they don't have all the documentation behind it, which it's always a good idea to have it, but you don't want to be scared to deduct something just because you might not think it's going to fly through the return or create a red flag or something like that. You don't want to be too scared to take a deduction.
So people might think, oh, I'm deducting too much.
Right. Like if you gave your church $10,000, you gave your church $10,000. I mean, it's all going to be there. Don't be afraid to take a full contribution just because you think it's going to be a red flag for the IRS.
And I know this will vary from individual to individual, but can you point to some basic things that, as you say, this was the biggest change that have been made? What should people be looking for, be aware of?
Right. Well, this year, for 18, we'll say this year being the filing season.
Yep.
You're getting a larger standard deduction than you've ever had. Before, everybody itemized. They put their interest that they paid for their home mortgage, their state income taxes, their contributions, some people have business expenses that they can deduct. They'd lump those all together and they'd come to a number. And for the average American, maybe it was like $12,000, $13,000. Well, this year, if you're married filing jointly, you get $24,000 as a deduction, regardless of how much you put out there. So, say your income was $70,000 together with your, let's say 75 for the math, 75 with your wife. You subtract the 24, and you're already down to $51,000. Whereas before, you'd have to collect all the information on everything. But so there's going to be a majority of people that are just going to be filing the standard deduction. That doesn't make the tax return any simpler, but you just don't have to maybe keep track. But if you're thinking that you might be over that $24,000 barrier or $12,000 if you're single, then you still want to keep track of everything.
And what's the easiest way to keep track of things? I mean, obviously, I saw an ad on TV. Danny DeVito, I think, was being used, and it was promoting a software or something. Yeah. And he says, receipts, what is this, the 80s? I mean, like the saving of receipts was an old-fashioned thing. Is that true?
Yeah, because generally everything is done electronically now, it seems like, on a credit card or a debit card.
Sure.
And, I mean, as long as you have that backup of things going through the bank, they generally you accept that as backup. But having the piece of paper makes everybody a little bit more comfortable sometimes, but they have programs now where you can scan those pieces of paper in. I think QuickBooks has a thing.
That might have been what the ad was.
And some of them will just automatically post it to their software, and it makes things a little bit easier than it used to be. And you don't have to bring a whole sack full of paper to me to do it. So
when you go through and you've done this now a number of years, you have clients that probably regular clients that come back to you year after year. Just you're their guy. What about somebody new who doesn't know? Gee, I don't know where I fit in. I mean, are there categories for these folks? I mean, that you found over the years?
Yeah, right. I mean, anybody that's really operating what's called independent contractor business, where they're getting paid by their employer through they submit invoices and then they get paid based on that type of thing. Or if you're in a small business, construction, and you're actually what they call a Schedule C independent contractor, that sole proprietor, that's another word for it.
Right.
I would always recommend that those people get help, because there's a lot of changes for this year, but then there's a lot of things that you may not have remembered to do in the past, that deducting your business equipment, you get more of that this year. It's almost, for most people, it's almost unlimited, because it's gone so high. I think it's almost $1 million is what they let you write off at one time. You used to have to depreciate certain things over 5 years or things like that, computers, that type of thing. So you want to be aware of the rules as they were and as they are now, and any changes that are done. So that's one thing. And then they've really kind of knocked down the entertainment category. If you take clients out for lunch and that type of thing, if you're actually having a business meeting, conversation, talking about buying, selling, those are all still deductible. But if you're taking your client to a Notre Dame football game,
oh, I see,
they're not allowing those anymore.
Okay, so some of those big ticket box seats, penthouses,
those are all gone. So if the Super Bowl, I guess I can't go this year. Nobody took me anyway. But
well, the Bears aren't going to be there.
Right,
so
we that kick,
lost
I've
interest.
seen it 100 times now.
Oh dear. I was interested. You had in your newsletter something, and I don't know how many people this would affect, but I found it interesting, just the detail. Something about if you bought an SUV. And it was something about the 6,000 pounds.
Yeah, they actually the heavier that they are.
Is that like for business?
And you have to use it for business. That's the number one caveat.
Okay.
So if you're using these larger vehicles for business, then you don't have. They had what was called the luxury vehicle, the they'd only let you write off $2,100 of any vehicle in the first year. That's increased to $10,000. But if it's over 6,500 pounds, then you can treat it as a regular asset, and it's not limited, so you can write that whole thing off.
So an Uber driver would be well to get a big,
as
heavy
long as
duty.
The gas prices stay $1.95 a gallon. But
Right. I guess that's right. We'll see how that goes.
But I mean, I'm sure some people's eyes lit up at the end of the year when they said that, ooh, I could buy this. That makes it worth it.
Yeah. So. Well, and we know the best-selling vehicle in America has been the Ford truck for 30-some years or whatever.
And that's got way over 6,500 even without me in it. But
so. Well, it's fascinating. What are some of the other little known, I guess you could say, things? And again, they may not affect everybody, but things that strike you as interesting that are there for people if they find them.
Well, I'm going to tell you one of the most interesting things that I thought that I haven't really seen a lot of press on is up until December 31st, if you got a divorce, alimony was taxed to the recipient, which in the normal would normally be the spouse or the female, but not always.
Right.
So then the payor of that alimony would deduct it from his income and taxes.
Right. You're saying that was
the old law. Yeah.
Old
so
law.
Any divorce up until December 31st of 2018 followed that. Any divorce after January 1st of 2019, totally gone. Alimony is not deductible by the payor and not taxed to the recipient.
Oh.
So that, I mean, anybody that's in that type of arena that gets a divorce now might be a wake-up surprise. I thought maybe the lawyers would be jumping all over that, saying, get divorced before December. And they probably were, but maybe they weren't putting it on the TV screen like they do everything else.
It's on that slow crawl at the bottom, you know. You got till December 31st. And that's interesting. It strikes me as, to change those kind of rules, obviously somebody is looking at, okay, that's going to impact the dollars that are come into the Treasury.
Yeah.
How do they compute all that? I mean, is that something that?
Yeah, I don't know how I hadn't really read any theory beyond how they came up with that ruling, but I guess it's interesting that most of the income will stay taxed at a higher amount because generally the person paying would be in a higher tax bracket than the person receiving. So I guess it's a way to offset some of the other things that have come through that are actually more beneficial and favorable to the taxpayer.
It's always going to be give and take.
Give and take, yeah. The ex-spouse will get less of a tax burden than the previous ex-spouse.
Right.
So
now you mentioned something before we went on here that's right up to the minute. With the federal government shutdown, what's the impact there? The IRS?
The Internal Revenue Service is working with about 10% of their workforce, which is about only 8,000 out of 80,000 employees. So I have a couple taxpayers that have gotten notices because one computer didn't match another computer for whatever reason at the
That's
IRS.
Always good.
Yeah, and so then you have to write a letter to explain it or call because then they, the computer thinks that they need to start coming after you to take your bank account or something like that. So I made a call in about 3 days ago, and the main number says that we're not taking calls at this time.
This is your government not at work.
And I think it was actually on January 2nd, so I thought, maybe they, had an extra day at the holiday. But no, that's continued. So I read that they're not taking any calls. They're not opening any mail for any replies. They're not really processing any returns that may be coming in now, which would include W-2s that are on paper or any paper type returns. The mail's just kind of sitting there. So it makes for it's going to be an issue when the whole resolution of the budget comes about.
When they
come back to work. Really, the only people working right now, they said, are the people in the computer IT area that are trying to implement this change of all the tax laws so that everything's going to read correctly when you file either online or on paper. And
does it strike you as we might see some problems down the road here?
I'm anticipating some. I'm
Get ready, folks.
I'm hoping they give me an extra month or something to file.
they should do that, because I'm thinking normally the IRS and you tell me, because this is close to you probably. They will answer questions, won't they? I mean, or they have websites, and if somebody has a specific problem, I mean, obviously they can go to an expert like yourself, but if the general public has just a general question,
sure.
Usually,
and I call for people too to ask questions. I mean, it's usually it's about why did they get this memo or memorandum and say that something was off, but it doesn't happen too often. But anymore, everything's being processed by computers, and when line 2 is 10 cents or $10 off of line 3. You know, I mean, sometimes can.
Whoa. And we won't even get into hacking or any of that stuff that
identity
somebody
theft,
could be actually trying to push it off.
But so it presents a problem. But they usually give pretty good advice if you're willing to stay on the line for about 30, 40 minutes and wait for them. But I have noticed that even here locally that there's a local IRS office kind of off Willow Knolls Road, and it used to be that you could kind of just walk in and take a number, and then they'd come talk to you. Now you have to call an 800 number. This is even before the shutdown and everything. I mean, but you have to call an 800 number, they have to decide if your question is worthy of meeting face-to-face, and then you have to make an appointment, a specific appointment, to meet with somebody there. And there really are only about 2 people servicing that office now.
Wow.
There's a few people on the audit side, but makes it kind of difficult to resolve any issues that you might have that after the fact. But it's kind of the way things are now. They're doing more and more by letters and phone calls and things like that, and online. So
is it? Well, I was going to say when you gave us that scenario of the IRS, I'm thinking more and more. You're wise to go to somebody like yourself.
Right. You want to get it done right the first time so you don't have any issues.
Just to have somebody there. Does that put extra pressure on you to kind of keep up with the times? I mean, how do you find out all this stuff?
Yeah, it's usually I do try to read as much as out there. There's always a lot of information through blogs that you might have, and just people doing podcasts, that type of thing, to learn as much as I can. Also, just trying to read as much as I can. I mean, things pop up. Got to read it with a grain of salt. I mean, we don't believe everything we read on the internet.
Right. Well, that's wise, because especially when it comes to, I mean, I'm thinking rumors spread fast. I don't think this is going to work this year, and so that'll spread across.
I got a few text messages when people heard that there's going to be delays. I'm not going to get my refund this year, and I mean, it can be interpreted differently. So, but I'm anticipating that there's going to be delays in getting the refunds. People that qualify for the earned income credit, they've started not releasing those refunds until February 15th. Anyway, just they have to make sure that. Because they've gotten a lot of abuse in that area where, they get false
I was going to say
security numbers. That
people have figured out how to play that. To get,
so they're really careful with those, so they don't release anything before that.
I was asking you earlier if you've hit the heavy season yet. We're talking about taxes with Joe Runkle, Peoria accountant, and you mentioned it's just getting started. And maybe these delays will push things back a little bit. But what is your calendar year like? I mean, crazy until April 15th or whatever the date is, and then or is it just carry on?
It's pretty heavily weighted toward April 15th. I mean, really, I kind of sat down a few times and said, pretty much, I don't really see a lot of people before February 15th, even though I'd like to. And then I got to have their tax return done by April 15th if they don't want to extend it. So that gives me 60 days to get a lot of work done.
Yeah.
And you kind of got to your social calendar, any type of thing, might as well go by the wayside. Right. Yeah. If I'm not sleeping, sometimes in my office in my chair, I'm working. So I try to take care of myself during that time. And but it is a pretty compressed.
Right. And the rest of the year is business things or
right. Business things. I do a lot of bookkeeping work, that type of thing. Some people, say, hey, I need my tax return done on that day. I still have a business that has to close, and I have to get all the information from that.
Right.
So not everybody has their information by April 15th. Usually have to have a pretty good idea of what they're going to owe so they don't have any penalties or interest. But some people can wait a little bit longer, which you get till October the 15th to file a tax return if you get an approved extension.
Well, we mentioned just briefly the business about the business car and the deductible, the 6,000 pounds thing. Mm-hmm. Are there been changes made in trading in cars or vehicles, I should say, now with this new tax thing? Yeah,
there's it all, the difference goes to basis, so that if you make a trade for a vehicle, then you can. There was a slight change about the trade-ins, and I can't remember 100%. It doesn't happen too often with my client base. So, but I know they did make a change there. I can surely get back to anybody who needs that information. But
I'm just thinking of things that people do,
right,
that are likely. I mean, hopefully divorce is a once in a while thing.
Yeah,
but
we don't recommend it to anybody.
But when it happens, it happens.
Yeah.
But cars and houses, anything there on buying and selling a house.
Well, I think you really need to really make that part of your thought process of deciding if you want to invest in a home, because everybody always said, well, there's always tax advantages of owning a home, and
right,
they're going to appreciate in value. Maybe not everywhere, but
some more than others.
Some more than others, and it's a great investment. And the interest rates are low; they're getting a little higher. Mm-hmm. Do I really need to buy a house? And if you're married filing jointly and you get a $24,000 standard deduction, the $5,000 of mortgage interest that you're paying in the bank to own a house doesn't help you any on the tax return, really.
Oh, really?
So well, it's there anyway, whether you pay it or not, and
right,
but you got to live somewhere, so
right,
you have to juggle that. But there's a new thing in the decision process where it was before it's tax deductible and I can write off my property taxes and everything else, but now
that's got to be a realtor's slogan somewhere. You got to live somewhere,
right?
And then, here's my card.
Yeah, sorry to all my realtor friends, but
well, I think they're probably standing by like everyone else,
sure,
wondering what changes are ahead.
Right.
When you heard all these, and I know it's an ongoing process going through probably the vast amounts of changes that sometimes will impact maybe only a small number of people, but other times affect more. Was there anything that surprised you out of those changes that were made, or is it, as you said, it's really a matter of give and take?
Yeah, of course there was like that, the divorce where it went from one side to the other. That was kind of seemed drastic.
Yeah.
I guess. They took away. There was a itemized deduction that everybody. Not everybody, but some people were taking advantage of, where if your employer didn't reimburse you for, say, you had to drive all over and they didn't pay you in 55 cents a mile as you used your car for business, you could take those as a employee business expense as an itemized deduction, as long as it was more than 2% of your income. That has been eliminated, along with totally, as long, and not because of the $24,000 standard deduction. This is just, you can't do it in 18 at all. Also, any fees that you pay to your investment company, like if you had money and they take a percentage of your assets as a fee, say 1%, those used to be deductible, and as part of that,
yeah.
employees can't take that anymore either.
Oh,
too.
really?
So,
Oh.
yeah, so there's a few things like that. If you use a computer for your investments, or if you got the Wall Street Journal, that type of thing, you used to be able to write off that, and you can't do that anymore.
Can't do that anymore.
That's totally gone. So,
Wow.
so yeah,
Things we learned
that
about.
and the entertainment.
Yeah. No more hosting people at these
Right.
expensive, Super Bowls. You said.
No more
do that.
boondoggles. should
Or
we
at
call
least
them.
you don't get tax
Right.
tax
You have to
deduction for
figure
it.
out another way
Yeah.
to pay for that. So.
Well, Joe, we're talking with Joe Runkle, the CPA in Peoria for 34 years. Joe, is what do you like to do with new clients? Do you like to sit down and kind of go over things, or how would you advise people who might see this and say, "I'll give you a call"?
I would be happy to meet with anybody that you call a new client. Usually, what I do in that arena is either schedule an appointment, or I'm at my office generally all the time, and I'm generally not with anybody. I'm just kind of there by myself doing taxes. So just stop
There's
on
Joe
by,
doing his
stop on
taxes.
by, 6707 North Sheridan. Just say hi if you want. It's right on the Rock Island Trail. So,
Is it? Oh, very good.
so yeah. So, but bring if I was to schedule an appointment to take care of somebody's taxes for this year, or just give them overall advice, bring your last filed tax return with you, so that I can kind of see where our starting point is, and then any knowledge that you have of 18 at this point. Of course, W-2s are going to start coming in. Your employer has until the 31st of January to get your W-2. Also, your interest and dividend 1099s. It's also just January 31st.
Is your business? Do you find it's a more competitive? We H&R Block and these other big outfits. Is that gotten more direct? I mean, or is there a lot of individuals like yourself in town? I mean, how do you look at the group you're in?
Yeah, I mean, I've seen a few of my contemporaries retire. I know at least I got 12 more years, because I've been putting my kids through college, and I still got one there. So,
right.
And then I got to build up some retirement for myself, because nobody's taking care of that for me. So
there you go.
I did a little bit over the years, but not enough. Nobody has enough. So.
Right.
But then, I mean, I have noticed, H&R Block. I have noticed that when somebody brings me their return that's been prepared by H&R Block, generally it's done properly. I don't find a lot of things that are wrong, but they're not the cheapest.
No.
And you don't get somebody that's been doing tax returns for 33 years. You might get somebody that's gone through a class a few times.
Yeah.
So I like to say by this time I can say maybe I'm an expert, or I kind of been there and I've been there, done that a few times. So.
Sure, been there and done that.
Right.
Very good. Well, hey, Joe, we're happy to have you with us, and I know you're going to start getting busy here soon.
Yeah,
so
I'm heading back to the office, and we're starting to get the W-2s out and that type of thing. The payroll tax returns, 941s, and all that. So hopefully, if you have employees, that's what you should be thinking about getting done right now.
Okay, and hopefully we get the IRS back to full strength.
Right. Maybe they can keep the audit department.
Yeah, I was going to say keep them quiet, and that might work out.
The processing department and the people that send out the refunds, we want them back to work as soon as possible.
Everyone wants those. Well, very good. Well, I want to give our thanks also to Matt Dayhoff, who gets this out on Facebook and gets it around the world, as you would say. But thanks again, Joe, and we'll see you next time.
Thanks for having me, Steve.
Oh, you're welcome.
Appreciate the opportunity. Bye-bye.